Welcome back to Fast Market. I'm Alex Coffey alongside Kevin Hanks. And Kevin, just when I thought there may not be any curveballs left, we got a market now, Kev, that has the S&P and the Dow higher, and the Russell and the NASDAQ is the only two areas lower. It is time for our cash tag segment, though. Let's talk some video games. We've got Jenny Horn, as you saw here in studio, and Andy Swan, the co-founder of LikeFolio.com, alongside us as well. So a lot of interesting things going on in the macro environment, but tech has been in focus. So let's talk some video games.
Yes, and both these names, Take-Two and Activision alike, saw very strong 2020s, of course, as so many people were forced at home and then played heightened levels of video games, which makes perfect sense. But actually, this is a market that's expected to grow into the next few years, with mobile gaming expected to grow by a 13% compound annual growth rate between 2021 and 2026. So that level of healthy growth is very positive for both of these names. Another thing is we saw the successful launch of Microsoft's Xbox X and Xbox S, both and plus Sony's PS5, which have led to an even more increased optimism for both of these names. So a lot going on here to sort of fuel this bullish sentiment. However, if you compare the two actually to each other, since June of 2016, Take-Two has returned over 380%, whereas Activision has only returned about 162%. So there is some degree of outperformance there. But Activision is, of course, the maker behind the Call of Duty franchise. Now, this has actually created some concern for investors because when you break down how they sort of, operate and generate their revenue, out of the $2 billion incremental increase in their bookings in 2020, only about $190 million came from its Blizzard segment. So Blizzard oversees some very important titles such as World of Warcraft, Overwatch, Diablo. So some are saying they really need another strong title like Call of Duty to sort of be the next catalyst for this name. Now, Take-Two rose actually last Thursday after buying Dynamics, which is a leader in video-based facial animation services. Now, Take-Two is showing that it's actually willing to invest further in internal development. They actually nearly doubled their developmental staff from 2017 to 2021. And its franchise portfolio is headlined by Grand Theft Auto, plus Red Dead Redemption, NBA 2K. So both of these names sort of boast these very popular titles. It's just sort of how they're faring in this space, and also the release times of some of these big games really impact their earnings in that given quarter. But the noise on social media is extremely positive because a lot of people point out that although the world is reopening, there is a degree of stickiness with PC gaming, and also people are, still actually at home regardless of the fact that the economy is reopening. So that brings me to our first tweet of the day, which says, "No issues with video gaming. People will spend on a new battle pass, game, or computer. They will spend whatever on Robux or a new controller. Gaming is huge and growing with big margins." And I do have to say that, just based off some of the people I know, I can't say that I am one to dish out a lot of cash on these video games, but people are willing to spend top dollar, it seems like, all across the board. And our next tweet also focuses on sort of the runway for growth that gives some of these companies, which says, "Activision underrated bullish point is that people by and large will not return to the office until fourth quarter of 2021 until 2022. So trends should remain strong through the year, and once comps really get tougher, each company has a robust slate of new titles from 2022 to 2023 to offset." So I thought this was really interesting because, Andy, this tweeter only highlights Activision and Take-Two, but I know that your data also highlights Roblox, which is a newcomer to this space. So I'm curious how they all sort of stack up to each other because although I do agree they could all be mutual winners, I have to imagine there is one leader in the space.
Yeah, there really is, and it's Roblox. This company really takes a new approach to gaming in general. Where Activision, Take-Two, they focus on creating the games, distributing the games, everything pretty centralized. Roblox takes a completely different approach. They've created a platform where really anyone can go onto the platform, create a game that then others can play, and those creators of games, those developers inside the Roblox platform, can get paid for the usage of other people. And so really unique approach, and it's paying big dividends. We see Roblox really leading the pack compared to Take-Two and Activision in terms of an increase in the number of people talking about playing on the platform. And from a timing standpoint and an overall consumer trends perspective, Roblox is hitting its stride at just the right time because, like you said, Jenny, we saw last year a lot of people staying at home. Their entertainment options were somewhat limited, and so a lot of people shifted over to video gaming. And we see that sustained a little bit. We see 77% growth versus 2019, so a 2-year look, 77% growth in people that are new to gaming. So bringing a lot of new people on board, but overall gaming mentions down 10%, which means less people playing the games for less time. And so it's a little bit of a confusing dynamic. More people are coming in, but they're probably playing less than they were, especially last year, because there's more to do. We've got the summertime effect. And so Roblox in a really good spot. And then I would put Activision in second place and Take-Two in third after that. But it's nice to see a new entrant that has a stock that we can invest in Roblox.
Andy, here's my question. Admittedly, I am not an expert in video gaming and the trends. However, I do have video game players that are my children, and I see their trends. And is what they're doing at the expense of an Xbox and a PlayStation? Because I'm not getting the normal pressure to buy a new Xbox or a PlayStation game. All of the games that my children seem to be playing are ones already on their computers or ones that they're downloading. And does that replace some of the demand for some of these, these hardware, these big video gaming things? I want to try to get a feel for the impact that these are making when it looks like, it appears to my virgin eyes, like the video gaming is moving away from Xbox and PlayStation. What am I getting wrong there?
No, I think Xbox and PlayStation still have a very strong presence in the industry. I do think that, Roblox is changing that a little bit in that the platform can be really played anywhere. It's kind of device agnostic, I guess you could say. Whereas Activision and Take-Two, they're primarily creating games for specific platforms, hardware platforms, and putting those out. Roblox takes a much different approach. It's really targeting, or at least is popular with, a much younger demographic. We're talking kids from 6 years old to 14 years old. So really that next generation of gamer. And I think what's really the most threatening to the traditional Activisions or Take-Twos is this idea of, community or democratized game development. Mm-hmm. And so instead of just controlling what the consumer has access to and which basketball game they're going to pick or which war game they're going to pick, a platform like Roblox is able to provide consumers with the ultimate choice because they have so many developers competing for each of those eyeballs. So really cool platform, worth checking out for people who don't have kids in that age group constantly begging them for more Robux.
Andy, to Kevin's point too, maybe he's not feeling the pressure to go buy the games and stuff now because their credit card's saved on the Xbox and they're just buying them straight on the platform themselves. But question for you, we kind of saw the Fortnite effect take place within this space a couple years ago where the model completely shifted. It was much more the model that we saw with mobile games, which was we're going to give you the game for free, but to get some, let's say aesthetic items or whatever it may be, to have a little bit more fun on the game, you got to shell out these small, what they refer to as microtransactions. And you saw names like Activision and Take-Two sort of adopt those models as well as time went on because they saw just how really impressive Fortnite's success was. Is that the defense that they can play versus a company like Roblox and other entrants into this space?
Yeah, they're all kind of shifting to that model. I think it makes a lot of sense. Overall, we're bullish on all of these companies really because, what happens is, yes, gaming is down a little bit in terms of people talking about playing video games. the economy's reopening, there's other things to do. But when you're bringing a growth rate of people new to gaming up 77% over 2 years, that's a lot more eyeballs onto these platforms. And with the microtransaction strategy, really what you want is the maximum number of players on your platform, on your game, whether they're developing or purely consuming. Either way, they're going to be spending money in your ecosystem. And I think that's the key. And each of these companies is doing a pretty good job. I would say Roblox is ahead of the rest in terms of, how advanced they are in that microtransaction, sort of creating its own economy. But the other ones have started down the path really successfully.
So, Andy, that actually brings me to just what I was going to ask you, because I was going to say, is this new to gaming, it's 77% on a 2-year percentage change. Is that concerning at all to you, though? Because I would imagine that PC gamers have more of stickiness because these are customers that are typically buying games. They're not adapting this free-to-play model like we just talked about with Fortnite. So are these new gamers actually sticky? Are they staying? Are they just sort of trying out gaming for a few months during the pandemic, then going back to their lives?
Seems to be holding up pretty well from everything that we can see. The cool thing about these companies shifting to a microtransaction strategy or a subscription strategy is that you don't have to be super committed to gaming in order to participate. You don't have to say, yes, I want to spend $70 to try a new game. There's other ways to get involved. And so you can stay involved, check out new titles consistently, and you don't have to be quite as bought in as the gamers of the past, the way that we think of them. And so I think it's broadening the base and allowing a lot more flexibility and a lot more ability for people to pay kind of for what they use rather than having to jump in with an upfront commitment that might be fairly large for their budget.
Good stuff, Andy. I love the kind of bonus pick here with Roblox. It's important too to look at, hey, sometimes the legacy players, there is a comparison there and there's a winner, but sometimes there's something hidden that you got to take your, got to pay attention to what the data is saying. And it looks like Roblox, whether or not it's still that hidden, stock's doing all right, is certainly jumping off the page here when looking at the data. But the co-founder of LikeFolio.com, Andy Swan, thanks for joining us as always. Jenny,